Start understanding credit and credit scores. Hello, welcome to Women's Financial Empowerment Group. I'm your host, Ruth Agveloso. Thank you so much for visiting my channel. If you're new here, please subscribe, like this video, and share it with your friends, and leave a comment and let me know what you liked and what you'd like to see on my channel. If you've been here before, thank you so much for coming again. Please go ahead and like, share, do all those wonderful things. And remember to hit the notification bell. That way you'll know whenever I upload a new video. On this channel, I discuss all things money mindset, making money, saving money, investing money, and more. So you're gonna wanna come back to hear what I have in store for you. In today's video, I'm gonna be talking to you about why you need to start understanding credit scores and managing your credit and how to do that. So stick with me till the end of the video so you can get all of these gems and jumpstart your journey towards better credit understanding. Okay, let's get right into today's video. What is a credit score? Let's start with the basics. A credit score is a 3-digit number that represents your credit worthiness. So say I'm the bank or the credit card company and you come to me to borrow money, i.e. get a credit card. I'm gonna think to myself, why should I give you credit? What makes you worthy to get credit from me? Your credit score is very important. It's crucial because it affects your ability to borrow money, the interest rates you receive, and even your job prospects in some cases. I remember having to turn down a prominent position because my credit score was low and I needed to have a certain credit score in order to work in that industry and in that position. Not good. Credit score is so important, more than I think most people realize. I think most people are aware of the highs and lows of the credit score, whether it's closer to 800 or closer to 500, but I don't think that a lot of people know exactly what it means and just how important it can be. Next, we're going to talk about the components of the credit score. So what exactly is this credit score made up of? Number one, it's made up of your payment history. This is a very significant factor in your credit score. It tracks whether you've paid your bills on time. So it actually matters whether you've paid your bills on time. Your credit utilization ratio is next. So basically what that is how much of the credit that's given to you do you actually use? So if you're given $200,000 of credit, are you using $100,000? Are you using $50,000? That's what it actually means. So basically it's in the form of a ratio or a percentage of the total amount of credit that you're given. So your usage compared to how much credit is available for you. The more of your credit that you utilize or use, the lower your credit score is going to be, or the more it will be impacted by your utilization. Okay? I'll get more into this later on. Another factor in your credit score is your credit age. So what that means is how long you've been using credit. How long ago did you open your very first credit card or your very first loan or whatever it is? So that also takes into play. So the longer your credit age or the older your credit age, the better it is for you. So I'm not going to get too much into that, but just know that that also comes into play when it comes to your credit score. Now I want to talk about managing your credit effectively. The number one way to manage your credit effectively is by paying your bills on time. Paying your bills on time will allow the companies that you're paying to report that you've paid it on time, and that will directly affect your credit score. If you hadn't been paying your bills on time before, if you go ahead and start paying your bills on time, it will actually boost your credit score. I highly recommend setting up automatic payments so that you don't miss a payment and you're able to pay on time. Even if you can set it up so that the money will come out before the actual due date, that would be my preferred, but as soon as possible, you want to make sure that that's paid so that it's paid on time and that you're not falling behind with any of the payments. Now, regarding credit utilization, you definitely want to make sure that you're aiming for the recommended 30 to 20%. So what that means is, again, you have a total amount that you are given in credit and how much you use of it will determine your credit utilization ratio. So you want to keep that ratio as low as possible. The lower you keep it, the better, actually. It shows your lenders that you're responsible with your credit. And you know what? It also shows that you don't really need the credit. So that is a good thing, because they know that you're able to use it and pay it off, as opposed to just using it to sustain your entire life. And I actually want to say something about that. If at this moment you find yourself in that situation where you're having to utilize credit a lot because of certain circumstances, please do not beat up on yourself and be down on yourself, because this is just temporary, but you have to have a plan to get out of that cycle. I've been there, so that's why I'm saying this. And it's a harsh cycle, but sometimes it's necessary at that time. And so having a plan to get out of it is really, really important. You also want to limit new credit. Be very cautious when opening new credit accounts. The reason why is because each new credit account you open can lower your credit score for a bit. So there's different strategies on how, if you need to get new credit, how you do it. You want to make sure that you're just not applying for credit here, there, and everywhere, but you want to be mindful of when you are doing that. Okay, let me know if you want a separate video on all the ins and outs of that. But let's just stay here for a second. Be mindful of how many you're opening and the time frame in which you're opening them, because like I said, it can lower your score temporarily. Most of the time it does. So whenever a company inquires about your credit, you consent for them to inquire about your credit, it does lower your credit score just from them checking. So you want to make sure that you're mindful of that. And be careful of all the credit card offers that you get in the mail. Some of them say hard pull, some of them say soft pull. Actually, no one says hard pull as far as I know, but they say like a soft pull. So that means it's less of a ding on your credit, as opposed to just a regular credit inquiry that you ask someone to check your credit in order to see if you qualify for a certain offer at the retail store or something like that. The next thing you'll want to do is review your credit reports. Now, if you're in the USA, normally there's 3 credit bureaus that we pay attention to. You want to make sure that you pull your credit reports and you review them carefully. You want to make sure that there are no errors on there. You want to make sure that the information on all of them is consistent and it's accurate. You can get a free credit report from all 3 credit bureaus, and I will leave a link in the description that you can use. I'm not sponsoring them or anything like that, but it's the one that I use, the one that I recommend to my clients, and like I said, it's free. Now right now you can get it more often than annually for free, so you definitely want to check that out. If you want to improve your credit scores, there are some things that you can do, like the ones that I mentioned before, but also you want to be patient. It takes time to improve your credit score. Sometimes you can improve it fast, and I've definitely done that. I have strategies to do that, but sometimes it takes longer. So you want to be patient in the process and not get too frustrated. The key thing is to be consistent with what you're doing. Be consistent and you will see the change over time. And keep doing the same thing over and over to maintain your credit score. Once you've gotten it to a level that you feel comfortable, you're happy, you're not in the place that you were in before, don't get too caught up into it, but just keep doing the same thing you've been doing as far as keeping your credit utilization lower, making sure that you pay on time and things like that. Just keep doing that stuff and you will see that you are maintaining your credit score, and you'll be happier because you'll be able to get better rates and all the other good things that come with good credit. It's very important to understand these concepts, understand credit, and manage credit effectively. These are actually some of the keys to financial success. In my financial coaching program, I'm able to sit down with my clients and work through a plan to get their credit under control. A credit fix plan is not a standalone service that I offer at this moment. It's part of the whole financial coaching package, but my clients are able to sit with me and really understand these concepts in depth and able to make decisions that will improve their credit and allow them to have better credit worthiness and be able to get more credit if they need that. And like I said, other benefits of having a great credit score. So if you're interested in managing your money better, whether it be your credit, budgeting, setting better financial goals, and being able to actually achieve those goals and leveling up your finances, you can see my information in the description box and set up a free call with me so we can talk about your situation and see whether you'd be a good fit for the program. As of this date of this video, I do have some more spots left in my one-on-one program where I'll work with you individually to diagnose your financial issues and then help you with a plan to get to where you want to be financially. So thank you so much for watching this video. If you found it helpful, please go ahead and like this video, subscribe if you haven't, leave a comment, and definitely come back. And remember, change your mind, change your pocketbook. See you in the next video.